Well, g'day there, traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me on this Friday afternoon market recap. It has been an exceptionally turbulent past 4 days worth of trade. We have seen the sell-off on Monday, the bounce take place on Tuesday, another considerable sell-off on Wednesday that did take me personally by surprise. However, once again, we saw the market stabilize and round out the week overwhelmingly bullish. Yes, the S&P 500 closed up on the weekly move. So did the NASDAQ. The Dow Jones Industrial Average closing down 119 points. But what you can take away from this market environment, albeit as ugly as it has been, is that we are still holding this support area. What is telling to note at this particular time is that the S&P and the Dow Jones Industrial Average, albeit very briefly, came on back down. It retested this green rectangular area of support that we've been speaking about for about 2 weeks now, and we saw a very quick reaction, not only once, but on 2 occasions over the past 4 sessions worth of trade. You can see this long lower wick indicating once again buying pressure around this 2,675 handle, something that we were speaking about not only during the week but also last week as well. And we closed on the weekly scale up 13.3 points, a relatively healthy white sort of body to the candlestick, and it sets the stage, so to speak, for the continuation or break of roughly this 2,746 handle. Now, as I sit down and bring you this recording, this is prior to the pro analysis class that I'm going to do very soon after. So I encourage you, if you are listening to this on the YouTube channel here, it is in your best interest, so to speak, to go into that in-depth analysis of our top 12 individual trade list and get a better understanding of exactly what we're looking to do for the week upcoming. A great educational facility and resource if you're wanting to learn how to actually perform and apply this analysis to the current markets. Very, very critical. Now, if I continue the discussion into the Dow Jones Industrial Average, again, this is what I was harping on about just moments ago on the S&P 500. You can see that long lower wick. We've spoken about this over and over and over. It tagged it twice during the week. You can see this 24,250 handle hold, and although we closed down 117 points, I do think this has a very good chance of overcoming the high that we priced into the market 2 weeks ago. All right, so all things considered, yes, we are holding support both on the Dow, on the S&P 500, and although it has been turbulent, there is always the opportunity for the market to crack below this area. However, I still firmly believe that we are making our way, albeit as a grind, all the way back up to, if I can bring back the daily time frame, up to 26,435 on the industrial average. Now, the NASDAQ has been a little bit of an exception. We didn't see as much volatility. We certainly didn't see the back test of any real critical support area. Yes, we did see a little doji candlestick on Monday, but as a lot of the tech companies took off, and this is what this update is going to be about also, referencing a couple of stocks that we've been triggered into, also have hit our respective targets on, the NASDAQ has not only closed its respective gap. Again, you have to think about the industrial average and the S&P 500 when I mention gap closures, because again, it is acting as a magnet. Although at times it feels as though the magnet loses its attraction, overall, these markets are going to continue to drift higher until we see the industrial and the S&P 500 close their respective gaps. But as you can see, and especially on the NASDAQ, during today's session, we really started to get moving up 112 points. And this is coinciding very, very nicely with, again, some of the movements that we're seeing in Apple, Amazon, and also Google, not to mention, of course, or not to forget Netflix as well, that we're really capitalizing on at this particular moment. Now, if you bring up the weekly chart, you can see for yourself just a very nice long day type of Morobozu candlestick, up 120 points again on the weekly chart. And really one thing to take note of is that, look, this respective resistance area, this is taking us, so really sort of priced in at 7,500, that psychological round number. It has cracked. I mean, we're trading at 7,554. We're 54 points above really our ultimate target. You can see really our ultimate target was 7,467, but this is another sign of strength, not to mention what we're seeing external to the industrial average, the S&P and the NASDAQ. Now, I'm not going to go into detail in that as at this market close on Friday. What I'd rather do is just recap a couple of stocks that are looking quite decent, one of which has been Google, because during today's session, we run on up and we ultimately hit our target here at 1,131. This was a trade that we were looking at and more or less being entered into at 1,050, 1,055 A lot of people actually entered into at lower prices, roughly around 1,020 during this secondary support area. And this was in relation to the NASDAQ coming back down and tagging its support along with the industrial average and the S&P 500. So it doesn't matter whether or not you entered in at 1,020 or 1,025 or even 150 or 1,055. We have hit our target. We hit it towards the end of session on Friday, and this has been an extremely profitable move. Yes, we have had to hold on to this a little bit longer than what we would have ideally liked to, especially after this sort of gravestone or the shooting star candlestick over here. We were talking about just leave it alone, let it do its thing, and then eventually we should see that continuation or break. This is looking more and more like a bull flag type of setup, but at the same time, we're rallying now back up to this declining resistance area. So this trade is effectively over at this particular time. I will give you an update on Google, but it certainly is something that I need to update you on. Also, we've got Netflix. Netflix was something that we triggered into last week. You can see at $342. It really started to get moving again on Friday. We closed up another $8.33. We're trading at $359.93, just shy of $360, which prices in about $17 of intrinsic value already into those open core contracts as well. So you can see that Google's starting to get moving, or at least it's moved back up into its resistance area. Netflix is breaking above its respective resistance area. I wonder what Apple and the likes of Amazon are doing as well. And really I must go back and sort of bring this all together for you. During this type of consolidational phase that we have been in, whether or not you want to call it that of the beginning of a bullish move or a bullish channel, or it doesn't really matter what you want to call it, a lot of these stocks, and I've been referencing this, have been still overwhelmingly bullish. We've seen them hold above their long-term simple moving averages. We've also seen them hold above their exponential moving averages, which has been hinting at, of course, the market break to the upside. Now, if you pay attention to Apple, have a look at this. We've been holding off from these rising exponential moving averages. We're starting to see them act as a trampoline. Now, Apple didn't trigger. It got very close to triggering, but this is looking as though this stair-step consolidation is set to break to the upside. Also, if I bring up these Bollinger Bands, you can see that we have a Bollinger Band squeeze as well on Apple. And the Bollinger Band squeeze is not only applicable to Apple, there are also a couple of other Bollinger Band squeezes set up on our stock list on the left-hand side, but also externally with a number of other companies that we've been looking at routinely in terms of trade setups moving forward as well. So it looks as though this volatility, and although Bollinger Bands in and of themselves, it's generally a period where the volatility is sort of sucked out of a stock as it moves sideways, and then you see an explosion either direction, generally if you want to keep it as neutral as possible. Well, even though volatility has been considerably high, the net movement of the markets really over the past 3 weeks, or since the second half of May into the first trading session of June, we've really moved nowhere at all, which is really setting the stage for these Bollinger Band sort of continuations. And that's a really interesting fact, or at least point to pick up on, as this market appears to be definitively moving to the upside, which is very exciting. Now, again, moving into another stock, Amazon. Another technology company almost breaking above definitively 1,640. A little bit of a spinning top candlestick, but the same sort of discussion is very applicable to this stock. You can see we're holding above these rising exponential moving averages. This entire period has been a reset of these oscillating indicators, as you can see on my screen, which again has just reset them from overbought conditions back down into a more neutral territory prior to the impending breakout. Now, what we're going to do is we're going to apply some other sort of indicating settings to these stocks. We'll be looking at the CCI and the ADX to a bunch of these individual stocks, also markets, to confirm some of these movements. And what you're going to realize is that although there is a lot of sort of, I guess, fear, or at least the sentiment may have particularly turned bearish over the past 4 sessions of trade, the technical picture, okay, disconnected from that sentiment or what we call market noise, is something that you don't want to miss out on or not pay attention to, because price is ultimately truth. And again, the technical snapshot of these stocks is still overwhelmingly bullish in the face of what appears to be, and what we're currently being inundated with, is that of bearish sentiment out there, saying how the markets are potentially set to enter into a major correction. You know, potentially a recession is coming, a crash is on the horizon, those types of things. Yes, we can potentially make the argument for that, but we can only make that argument at a later time. And the later time is going to be when we see the Dow and the S&P 500 back up at its respective resistance area. Now, continuing on with this, Boeing Airlines simply moving sideways. A trade setup is there. As I said, I'm about to record Pro, and I will be going through that with you. Also applicable to Baidu too. It is holding this 240 handle. It's starting to bounce. However, I've got some interesting analysis on Baidu. Caterpillar largely moving sideways, not doing a whole lot. What is critical at this point is whether or not these exponentials hold support, not hold support, but hold those rising exponentials, because mixed within this picture, there is a bullish trade setup that I am going to teach you about, or at least speak about, over the coming 90 minutes or so. COP holding up above 66.97, a trade we spoke about 7 days ago, or 7-8 days ago. Last Saturday was when we went through the analysis on COP, the reset back down into support. We're starting to see a pretty decent bounce on that particular stock. CVX didn't have as nice of a risk and reward ratio. However, we do definitively have a very short-term resistance area that, again, I'm going to go into detail with you. IBM, I believe it's going to hold this support. This is another mixing of the Bollinger Band squeeze. So as I was just going through that with you, with Apple, you can see this squeeze taking formation on IBM. I think IBM is set to move quite a distance. It hasn't made the move yet, but I am looking at this coming all the way back up to 158. We are going to set a trade up on that stock in due course. Netflix have already recapped, continuing to the upside. And Tesla, I think, is something that's going to trap a lot of bulls. People are buying buying off this 280 handle. I think they're going to get trapped, and I think really Tesla's set to roll and ultimately crack 272.27. Now, outside of this discussion, we have seen a lot of volatility in some of those additional stocks that we have been following. DAL, long above 51.90. It's priced in at 54.42. I was expecting this by the end of the week just past to be up here at 56.50. We never got there. However, if the market continues bullish, you may just have to hold this for a little bit longer until we see ultimately DAL come back up to this resistance area, as I just quoted, at $56.50. Now, what's interesting, again, is that LUV isn't really doing all that much either. It's pulling back down to support at 50.96. Which is quite interesting. We are still seeing, again, this stock move into rather extreme oversold conditions. I still think we are going to see some bullish divergence set up and ultimately a very quick move to catch on back up to the relative movement in DAL. You can see if we fail to crack below this support area, we could see a very quick, a very volatile move off from this support. Very similar to what we saw during these two candlesticks here, but we didn't get that initial follow through. I think this next push off from support is going to achieve just that. Now, JD, more or less doing nothing as well, 36.12, also 37.22. What is interesting to note is that we do have a one white soldier candlestick. I made reference to this, I believe, on Wednesday afternoon when we saw that first one white soldier candlestick set up on the market indices. Although we did go through, of course, that sell-off on Thursday, we saw the markets bounce once again on Friday. Off from the sentiment shift in that original pattern. Well, here it is once again on JD. I think it was up very close to 3% today. Might have been 2.8%. But largely, this is still moving sideways and also going back into the Bollinger Bands, or the theme of potential Bollinger Bands setting up all over the place. It looks as though we do have a false break to the downside. This might be the third break, and this might be the impetus really to push us on back up to 38. And if we overcome 38, well, then that bullish divergence is going to confirm with this subsequent series of very slight lower lows. And then you can see the dynamic of that stock change very, very quickly as well. Now, I do have other stocks to reference. I don't have them written down in front of me. Actually, I do. FDX, HD, TWX, and a couple of others. Oh, Russell, of course, Russell 2000, the transportational average as well. I will move through those in that pro analysis class. That's going to do us really as at this Friday afternoon market recap. If you have any questions, please email me, success@pivotpoint-trading.com. Outside of that, everyone, enjoy your weekend. It is not a long weekend, so the markets will be open Monday through Friday. And I am very excited to see whether or not we can shake this volatility and just get some directional commitment. All right, longer than just simply one session to get this market really moving back on up to these above mentioned resistance areas that we've been laser focused in for quite some time. Don't lose sight of that weekly candlestick. It makes a lot more sense if you analyze the weekly candlestick as opposed to that daily candlestick with a lot of the chop that's happened. Again, just to conclude, down considerably on Tuesday, up, negating most of those losses on Wednesday. Sell off depending on the market again on Thursday, not as low. It didn't price in lower lows, but then a relatively strong session to conclude the week on Friday, pushing two of the three markets, that being the S&P and the NASDAQ, to a higher weekly print. The Dow still about 117 points to the downside, off from the close 2 weeks ago now. Okay, so That's going to do us, everyone. Again, enjoy your weekend. It's James signing off on behalf of Pivot Point Trading. All the best. Farewell.